In this class, we are attempting question 1, March 2019 diet, part 2, accounting technician scheme, West Africa, Atswa, also called Abwa. You can also place orders for my textbook as usual, okay, 7,000 or 12 USD. You can reach me on the number displayed on your screen or pay into the account displayed on your screen. You can sponsor. So quickly, question 1, Atswa part 2, March 2019. Galaxy Enterprises, a toothpick manufacturer, extracted the following trial balance as at 31st December 2018. So we have the trial balance there: capital, plant and machinery, motor vehicle at cost, inventory, purchase of raw materials, returns outward, turnover, trade receivables and payables, wages, bank overdraft, direct expenses, factory electricity, salaries, sales commission, motor vehicle expenses, calculated depreciation, plant and machinery, motor vehicle, and then we have allowances for doubtful debts. We have cash in hand, insurance, repairs for plant and machinery. So that's the trial balance there, basically. And I want to believe at this level you understand where to place your balances in a trial balance. For instance, your assets are debited, your expenses are debited, your incomes are credited, your liabilities are what? Credited. So I expect you to understand that simple technique on the trial. So we have assets here, debits, liabilities, credits, expenses, debits, incomes are what? Credited. So this is basically how your balances are placed in the trial balance, and I expect you to understand that at this level. So if you have issues with it, you can visit jadosconsulting.com to take classes. We have classes on assets, classes on liabilities, classes on expenses, and classes on incomes. In there you learn these techniques of treating the item balances based on where it falls or how it is behaving. If it's behaving as an asset, debit; behaving as a liability, credit; behaving as an expense, debit; behaving as an income, you credit. All that for free on jadosconsulting.com. If I will believe that you gain knowledge. So on your own, you can help the cause by giving a free will donation. So let's continue. So basically, we have additional information to the trial balance. I can see closing inventory there as at 2018, raw materials, finished goods. 2, we have insurance. 3/4 of the insurance was for plant and machinery. Wages in arrears was 62,000. And then we have number 4, provision for depreciation for the year is as follows: plant and machinery 10%, motor vehicle 15% on cost. Then 5, provision for doubtful debts to be made up to 10% of trade receipts. As a matter of fact, we have classes on adjustment to final account. We have classes on depreciation. We have classes on provision for bad debt, provision for discount allowed, provision for discount received. We have classes on accruals, classes on prepayments. They are all free. Go to jadosconsulting.com to take the classes for free. You'll be glad you did, and you can support us in any way you can. So let's proceed now. We have Galaxy Enterprises. So I can see Galaxy Enterprises. So we have Galaxy Enterprise. Let's shorten it. So the question is saying that we should prepare manufacturing accounts and then statement of profit or loss. So basically, you should understand that your manufacturing account is simply what we call production account or production statement. What we're trying to achieve here is the cost of production. So what we're saying is, if you manufactured cake, remember your cake, your usual cake, okay, cupcakes and all that, they call it baking. But whichever way you look at it, you're actually manufacturing, because you're going to be using some materials, your flour, your egg, and all that, okay? So if you want to bake cake, for instance, you need materials, and then probably you need an oven, which is more like the factory that you need at that point in time. You need, yourself, if you're the one doing that's a labor, or if you're going to use your house help, that's labor. So basically, when you put all these costs together, okay, we now get what we call the cost of producing the cake. So that's the same thing for manufacturing account. What we want to achieve here is the cost of manufacturing the product. So after manufacturing, what do? You sell. So it is the point of selling that you have to prepare your trading profit and loss account to derive the profit or loss from the goods that has been manufactured. So basically, the first one, which is the manufacturing account, you have to prepare here, is to get the cost of production, or what we call the production cost. And then the second one, they say statement of profit or loss. That's more like your normal income statement. They want to know the profit or loss made on the goods that have been manufactured. So with that in mind, we have a class, of course, on Jados Consulting on manufacturing account as well. So you can go there and take that class. So with that in mind, let's quickly prepare what we have to prepare. So the first there, I say manufacturing account in vertical form. Okay, so what happened was saying manufacturing account as at for the year ended. Okay, for the year ended that the 1st December 2018. Okay, so remember, what are we doing? We are trying to manufacture. So what are things we need? We need materials. Okay, so let us say, let's call these notes. So we just show how we got. So first thing, we need what? Materials. So cost of materials used. That be cost of materials used. Note 1. So how did we get the material? So let's come and show that here. So let's call it note 1. Okay, that's the cost of materials used. Okay, so what are the items? If you want to manufacture, if you don't have materials, you buy materials. Okay, so your normal way of getting cost of goods sold. So we're going to get cost of materials used, or cost of materials utilized. Okay, so what do? It's possible to have some in stock. So we say opening stock of raw material. So what's the question saying? From the question, our opening inventory raw material there is 350,000. So we say 350. Let's put the 3 zeros here to make it easy, so we don't have to stress ourselves. So we have 350,000. Okay, so what's the next thing? We purchased, Abby. So purchases in the question there is saying, I can see purchase of raw materials there, 1405. So we have purchases 1405. So if you add, what do you have? 5571. Okay, so when you buy material, it's possible for you to use your money to bring them in. We call it carriage inward of raw material. If it's there, you add it. Let's check. Is there carriage inward in the question? Okay, I can't find carriage inward. Then it's possible that when you actually purchase materials, it's possible for you to return some back to the vendors or back to the suppliers. So that will reduce the material. So is there any returns outward there? So let's go. I can see returns outward in the question, 35. Returns outward is 35. So we have 35. We call it returns outward, 35. So you're taking out. So 5 minus 5 here is 0. 5 minus 3, 2. So what do you have here? 7, 1. So this is your cost of raw materials available. Okay, available. So now, if this is available, it's possible that you didn't use everything. So you now ask, is there any closing stock of raw materials? So you go to the question. I can see closing inventory of raw materials with 480,000. Okay, so we say closing stock of raw materials. According to the question, we have 480,000. So we have 480. So take that out. 0 minus 0 here is 0. 12 minus 8 here will be 4. remaining 6 here. 6 minus 4 here is 2. So we have 1. So this is our cost of what? Raw materials what? Used. Okay, or utilized. So that is what we bring here. Okay, so we have 1240. So now we have the cost of raw materials used. Now, when you get the raw material, it's possible for you to use labels. Okay, so we call it direct labels. All the factory guys that you have in your factory to produce, they are part of production. They are directly part of the production. We call them direct cost or direct labor, direct expenses. So any expense incurred directly towards what? Production. We call them direct what? Expenses, or direct labor, or direct wage. Sometimes some companies utilize what we call contract workers or part-time or short-time workers. For instance, maybe for while manufacturing is going on, they just needed some additional hands. Okay, they probably get some guys hanging around, bring them to the factory so that they can help production process. Okay, so that's also part of what we call wages. So any cost incurred directly towards production forms part of what? Of production. So here we're going to look at any direct cost. What is there any direct cost in the question? So here I can see direct expense here. Direct expense here, what I'm seeing here, direct expense here, I can see 13. Direct expense, I can see 13. So we have direct what? Cost or direct labor. Let's call it note 2. So here we're trying to get or gather all the costs, direct what? Cost or direct expense or direct what? Labor. So let's gather all the costs incurred directly towards what? Production. So in the question I can see wages. I can see direct expense. What's direct expense? Direct expense, I'm seeing 13. So direct expense, we say direct what? Expense there. So okay, 13. And then we have wages. Okay, we have wages there. Wages there, I can see 438. 438, but we have to ensure that when we pick an item, we look to be sure that there's no additional information to that item. If there's additional information to that item, we have to adjust accordingly. So here I can see wages, and in the wages I see in the additional information I can see wages in arrears, 62,000. So we have wages. In the trial balance, wages is wages there is 438,000. So we have 438. Then in the additional information they're asking, they said wages in arrears was 62,000. What's wages in arrears? Wages in arrears is more like accrued wages. Like I've explained that earlier. You can go to jadosconsulting.com to take classes on accruals. Accruals simply means expenses that has been incurred, okay, but yet to be paid for as at the time of what? Reporting. Okay, so if you have incurred expense and you have to pay at the time of reporting, we call it accrued expense. We'll make provisions for it. Usually accruals at the end of the period increases the what? Expense of that what? Line item. So we're saying that wages in the trial balance basically what has been paid for is 438, but they're not saying that as at the end of the year there's still 62,000 that is being owed for wages. So wages will increase. Okay, go to jadosconsulting.com to take your class on what? Accruals. Okay, so we have addition here, 62,000. So we have plus 62. So what our wages will now be how much now? 8 plus 2 here is 10. Okay, carry 1. 3 plus 6 is 9 plus 1, that's 10. Carry 1 again. And then we now have 4 plus 1, that's what? 5. Okay, so you can check that on your own. Just put that here. We have 005. Okay. So that's it for wages. So is there any other direct expense? Let's be sure. Is there any other direct expense? Is there any other direct expense? Any other direct expense? Okay. Then another direct expense. I can't find any. So that's it for direct expense. So direct expense or direct cost, according to the question, is what? When you add this together, or when you add this up, you have 513. That's 513,000. So direct cost of what? 513. Okay. So what's the next thing? Now, what we've done here is that we've been able to derive or bring here into consideration the materials used. We have been able to look at other costs incurred directly to the what? Production in form of labor. And then there's something called factory overhead expense. Remember, you are actually manufacturing somewhere. Your cake that you're baking, maybe you're using your kitchen. Okay, remember we've taken into consideration the what? Your flour, your eggs, your sugar, your milk, and all that. And then we've taken into consideration you yourself, which is the labor there, or your house help, which you're going to pay an allowance for baking the cake. And then we need to take into consideration the space, the kitchen now, which is more like the factory, and then the oven, which is more like what I call now the machinery, the plant and machinery that you're using. Okay. So, what is the cost, or what are the expenses incurred, in keeping the factory? Okay, what are the expenses incurred in keeping the what? The factory. So here we have to consider what we call factory overhead what? Expenses. Factory overhead. Let's call that note 3. Okay. So we say, excuse me, so what do we say? Let's call it note what? 3. Factory overhead what? Expenses. Okay? So what are the factory overhead there? What are the costs incurred in keeping the factory that has been used to manufacture? So there I can see factory electricity. So factory electricity there is 124,000. Is there any information on factory electricity? No, there's none. So we say what? Factory electricity. How much is that? Factory electricity here, according to the question, is 124,000. So we have 1, 2, 4. Any other item there? I can see salaries is administrative, sales is for distribution, motor vehicle is used for distribution or administration. Then plant and machinery is used in the factory. Okay, and then what else? I can see what else? Repairs of plant and machinery there. So let's go. Repairs of plant and machinery. So we have repairs, plant and machinery. Remember, your plant and machinery is used in the factory. So the repairs on it. So is there any information, any information on it? No. So what's the repairs there? 100,000. So repairs here is what? 100. What other factory expense is there? Okay, I can see. Okay, insurance. Additional information to insurance. 3/4 of the insurance was for plant and machinery. So they spent money on insuring the plant and machinery. So that means your insurance is shared between administration and distribution and what? Manufacturing. So let's bring the one that is for what? Manufacturing. So we say insurance, plant and what? Machinery. So they say is what? 3/4 of insurance. So we say what? 3/4 times what's the insurance according to the question? Insurance according to the question is what? Where is the insurance? The insurance there is 161. That will be times 161. So what do you have? Put your calculator, please. So we have 3 divided by what? 4 equal to this times what? 161. So I can see 121 approximately there. So let's say 121. So 121 will go to what? Factory. The balance will go to what? Sale and distribution. So any other thing on factory overhead there? Okay. Is there anything on factory overhead there? Usually there's what we call work in progress. Work in progress will be used to adjust in the manufacturing, but that is not where we are now. We are still on factory overhead expense. So what about depreciation on the plant? The plant that is being used. Depreciation on plant and machinery. Okay. What about the plant that is being used? What about the plant that is being used? What do you have there? Plant and machinery, they said it should be, go to additional information. Plant and machinery, depreciation is what? 10% on costs. So what's the cost? Okay, I can see it in the trial balance there. Plant and machinery at cost is 200,000. That's 2 million. That's 2,000. So 10% of 2,000. 0.1 times 2,000. I think that is what's that? Excuse me. Okay. So we have 0.1 times 2,000. 200. So we have 200. Okay. So what else? Then I think we are yet to touch regarding factory. So we have to check the question to be sure of what we're doing. So, okay. So we've basically treated all the factory expense requirements. So what do? Let's add up. So we have 124 plus 100 plus 121 plus 200. So I can see 545. So your factory overhead here is 545. So basically we've been able to derive the cost of material used, the direct cost incurred, and the cost incurred in the factory. I made use of your kitchen as an example. You know, the oven you use in baking baking the cake is in your kitchen. So your kitchen is more like the factory. The oven is the plant and machinery. So all those things that have to do with what factory, okay, is what we use. The cost is what we bring here as part of what manufacturing. There's what we call work in progress. Work in progress is, you know, products that are yet to be manufactured or completely or finished, you know, as at the time of reporting. So we normally adjust opening work in progress minus closing work in progress, whatever we have to bring here. So we check, is there any work in progress in the question? So let's check. Is there any work in progress? I can't find any work in progress. So work in progress is, let's just say adjusted work in progress. So let's dash. Okay. So if in practice or maybe in any other exam you have work in progress, you adjust for it. Opening work in progress minus closing work in progress. Whatever you have, positive or negative, put it there. So let's add up our cost. So you can use your calculator. Okay, so we have 1240 plus 513 plus 545. Okay, so this is 2298. So we can call this cost of what? Production, or what some people refer to as cost of goods finished or completed. Let's use completed. Okay, so this is 2,298,000. So this is your manufacturing account or production account or production statement, depending on what is being used where you are. So the next requirement saying that we should prepare statement of profit or loss for the year ended 2018. Like I said, that after manufacturing, of course, you're not eating them, even if you tasted some while manufacturing, okay, you're expected to sell, okay? So what we're saying is that you have manufactured and then you've sold. So what is the profit or loss made from the product what manufactured? Okay, so let's prepare. So let's call it, what do we call it now? So they say we should prepare what? Statements of what? Profit or what? Loss for the year ended 31st December 2018. Okay, so in the same way, we have notes and then we have a naira sign here. So remember, you're manufacturing, and then you've manufactured, and now you want to what? In fact, you sold. Now you want to know the profit or loss you made from what? So it's your normal trading profit and loss account. Okay. So what do you have? You have what? Turnover. So let's call this note 4. Let's continue from. So we have note what? 4. So what's your note 4? Turnover. Okay. So what's your turnover here? You have sales. Sales, maybe when you sell to your client or customers, it's possible for them to return. Okay. So when you take your sales and then you take out your what? Returns inward to get your what? Turnover. So is there, what's the sales there? As a matter of fact, they use turnover directly. So is there any returns inward? No returns inward. I can't say any returns inward in the question, or sales return. That they can use it interchangeably like that. So sales, according to the question, they use turnover here is 3,605,000. So we have 360.5. Okay. So returns inward. So is there any returns inward? Is there any returns inward? We deduct. But according to the question, there's no returns inward. I can't see any sales returns there. So what do? It's more like dash there. So deduct, you still have 360.5. So this is 360.5. Remember, what do? Your profit is between your what? Your sales and cost of what? Sales. So we say what? Cost of what? Sales, or what they call cost of goods sold. So let's call that note 5. So we'll say note 5, okay, cost of goods what? Sold. So this is where you do your opening stock of finished goods. You know, you're selling goods now, you're not buying material again. So we say opening stock finished what? Goods. So what's the finished goods in the question? I can see inventory there, 1,318. Finished goods there, I can see 410. That's 410,000. Okay, so we have 410,000. You know, we have 3 zeros up there. Okay, so 410,000. You have 410,000. Then what do? You transfer your what? Your goods manufactured. You're not purchasing finished goods here. Although it's possible for you, you know, to have that scenario where you compare manufacturing and purchasing to get market value. That's not what we're testing here. Here we are manufacturing, so we are not buying goods. So manufacture and then transfer to the trading section. So now we have finished goods. Maybe at the end of last year we still have some goods that we manufactured that we are not finished selling. So it becomes our opening stock on finished goods. And then this year we manufactured. So what do we manufacture? Based on the manufacturing account, cost of production or cost of goods is what? 2298. Okay, so we transfer it to this trading section. So we say cost of what? Goods what? Completed is 2298. 2298. So you add up. So we have 8. 1 plus 9 is 10. Right? 4 plus 2 6 7. So this will be what? 2. So you can call this cost of what? Goods what? Available for sale. Now this is what you have for sale. It's either you sell everything or you sell some and leave some. So if at the end of the year you still have some left, which we call closing stock of finished goods, then you have to take it out to get what you have actually sold. So is there any closing stock of finished goods? So let's look at the question. Let's look at the question. Okay, I can see closing stock of inventory there. Finished goods there is 495,000. So we have closing stock. Closing stock of finished goods, 495,000. We have 495. Okay, so we deduct 8 minus 5 is 3. 0 minus 9, so 10 minus 9, 1. Remaining 6, 6 minus 4, 2. So we have 2. So this is your what? Cost of what? Goods what? So that's what's coming here as your cost of what? Cost of sales. So we have what? 2213. You deduct, so you can get your gross profit or loss. So here 5 minus 3 is what? 2. 10 minus 1, 9. 5 minus 2, 3. 3 minus 1, 3 minus 2 rather, 1. So this is your what? Gross profit. Okay, if the cost of sales is more than the turnover, it's gross what? Loss. Okay, so you now check, is there any other income? So what's the next one? They will say what? Other income. You know, aside from manufacturing, it's possible that they have other income. Maybe they have a space they rented out to get some money, or they did some other extraordinary activity to bring in money. But let's check the question. Is there any other income? Okay. Is there any other income? No other income. But let me say something. Now remember, any question where you have provision for doubtful debt, or provision for bad debt, or provision for or allowance for doubtful debt or bad debt, and then there's an adjustment. You know, when you're trying to treat your other income, you must be sure that the adjustment on the provision for bad debt is an expense before you proceed. Now, we can't find any other direct other income here, maybe rental income or commission receipt and all that, or discount receipt and all that. But in your additional information, it's important to have an item that when adjusted can result to an income, especially provision for bad debt or provision for what? Discount allowed. So let's look at the adjustment for provision for bad debt. Okay, so here we have, they said provision for doubtful debt is to be made up to 10% of trade receivables. Now remember, I've explained you can go to jadosconsult.com to take classes on what? Provision for bad debt and all that. Okay, all adjustment to final account is there, free. Now, in adjusting for your provision of bad debt, remember your provision for expenses have credit balances. That's placement of items based on their behavior. Assets are debited, incomes credited, expenses debited, liabilities credited. The provision for expenses, okay, are usually credited or placed in the credit side of the trial balance. Now, that's usually at the beginning of the period. But now, if you are adjusting at the end of the period, which is usually the reporting period, it's possible to have increase in provision or decrease in provision. So when you have increase in provision, it means there's an expense item. But when you have decrease in provision, it means there's what? An income item. So now, let us look at how the adjustment will result into. They are telling us, they are saying we should what? We should make up provision of that to what? 10% of trade receivables. So what is trade receivables? Go to your trial balance here. I can see a combination of receivables and payables. That means if you don't understand how to place your balance items based on their behaviors, you might have issues here. So you can check that out on jadosconsulting.com for a complete class. But I already explained where to place assets and liabilities here. Assets are debited, liabilities are credited. So receivable is like debtors, so it will be it's an asset, it should be in the debit side. Payable is like creditors, it's a liability, it should be in the what? Credit side. So we have trade receivables and payables. The one on the debit side is your what? Receivables. The one on the credit side is your what? Payables. So the debit side we have 221. We have we have what? 221. So they're now saying that we should make it up to what? 10%. 10%. So what's the 10% of 221? So times 0.1, I think that should give us 22.1. Okay, that's more like 22. And then in the trial balance, I can see allowance for doubtful debts there at 29. That means the opening provision is 29, closing provision is 22. So what's the difference? 7. That 7 there is a decrease. So that means there's an income item. So that means that we have an item to treat as other income here. So we can call it what? 7. Okay? You can call it 7. So when we add up, we have 9, 9, 3, 1. So this is more like your what? Gross what? Income. Okay? So the next one, let's take out our what? Our total what? Expense, which comprise of what? Okay? Which comprise of, let's call this note 6. Okay? Which comprise of all the indirect expense. So then let's not call it indirect, all the what? Administrative and distribution expense. Let's not call it indirect expense. Let's call it administrative and distribution what? Expense. Yeah. So let's go. So let's say note what? 6. Administrative and distribution what? Expense. Okay. So what's the first one there? According to the question, I can see what's the salaries. Salaries there is 285. But you have to be sure there's no additional information on that. So I've checked, there's no additional information. Okay, the next one there is sales commission. Sales commission. So check, is there any additional information? What additional information? There's sales commission there. I can see 60. No additional information. Sales commission there, 60. The next one, motor vehicle expense. I can see there 59. Any additional information? No additional information. So we have motor vehicle expense. What's there? I can see 59. The next one there, what's the next expense there? Insurance. Remember, we distributed insurance. Insurance is 161. We've taken 121 to factory overhead expense. Okay, so the balance will come here. So that's 161 minus 121. So what do you have here? 40. What's the next one there? Depreciation. Depreciation on motor vehicle. Motor vehicle is used in distribution and administration. It's not directly related to what do you call it? Manufacturing. Except maybe somehow they're trying to take it to a portion. But then let's go with the flow. So we have 15% on cost. So that will be what? 0.15 times. What's the cost? Motor vehicle at cost is 900. 900. So 0.15 times 900. What do you have? 0.15 times 900. 135. So is there any other expense that we have not treated? We've done wages, we've done insurance, we've done cash in hand is an asset item, that's balance sheet. Allowance, we've done that. Motor vehicle expenses, commission, salaries, we've done all that. Okay, so that's it. So what's your total expense here? So let's add up. Okay, 285 plus 60 plus 59 plus 40 plus 135. Okay, so that's 579. 579. So what do? Come here, total expense 579. So you take it out. Okay, so Say 1399 minus 579. So what do you have? 820. 820. So this would be your net worth, profit or loss. Loss is when your total expense is more than your what? Your gross income. So basically, what we've done here is to prepare manufacturing account, also called production account or production statement, to get our cost of production, and then prepare statement of what? Profit or loss, or what you call income statement, to know the profit or loss position of the what product manufactured after selling. You know, when you manufacture, you sell. Okay? And then the question tested additional information, accruals, depreciation, provision for doubtful debt, and all that. Okay? So if you have questions, you can drop in the comment section or reach me on the numbers displayed. I'll be there to reply with the right answers. And if you feel that I've added some knowledge to you, you can support the cause by your free will donations, so we can continue with more videos, which we are doing. We're recording so many videos. We're going to add up some other subjects and courses as time go on. So that is it. Thank you.